Now that we have all of those journal entries recorded in our general journal, we have our transactions recorded, but we need to summarize those transactions or group all of the transactions related to cash together so that we can see what balance we have in our cash account. All right, using the same transactions we've been working with on the previous videos, I'm going to describe now how to do posting to the T accounts which are in the general ledger. For our course, we are going to use T accounts. There are more complex type of accounts shown in your books as balance column accounts, but we're going to go with the more easier ones. In our first transaction, the owner had invested $15,000 cash in the company. The journal entry was to debit cash for $15,000 and credit capital for $15,000. Just like debits are on the left and credits are on the right in the debit credit playbook I used, and also debits are on the left and credits are on the right in the dollar amount columns in the journal entries, we're going to put debits on the left and credits on the right again. So cash was the account that we debited, so we're going to put it on the left for $15,000. And capital was the account that we credited for the $15,000. And in posting the debit to cash and the credit to capital, you've now just posted your first journal entry. In order to show the two sides of the columns, I'm going to go ahead and do the second transaction also. In the second transaction, it was land that was debited for $10,000. So I'm going to put it on the left-hand side, and cash is credited for $10,000. The reason I wanted to do this is because you don't put this as a minus. It's just debits are on the left and credits are on the right. So don't put the $10,000 as a negative number. You will see when we move on to calculating the balance in the T accounts how the credits are actually being minused from the debits. So there's an example of how to post transactions. You would then continue posting the rest of the transactions. Now that your transactions have all been posted, we're actually going to calculate this balance. The book doesn't really show you how they calculated this balance in very much visual format, so I wanted to show you in a more visual way. So here is how we're going to calculate this balance. First of all, we're going to sum up all of the debits. In this case, it was $19,500 worth was our debits. Then we're going to sum up all the credits. In this case, $16,600. Then we're going to minus the smaller side from both sides. So in this case, we're going to minus $16,600 from both sides. Obviously, we now have a zero over here on the credit side. And when you do this summation here, $19,500 of debits minus $16,600 of credits equals $2,900 positive. The reason I've shown these as being crossed out is because we don't show that level of detail. We would just go from posting all the cash transactions, all the debits and credits, and then we would just calculate one final balance. It is very critical that you leave the balance over here on the debit side because we had more debits than credits. This shows that we have a debit balance of $2,900 in the cash account. And that's critical because remember, your debit credit playbook shows that we have to have normal balances at the end of the accounting period. So if your cash had a credit balance, meaning the credits were bigger than the debits, you would know that you have made an error because we do not break any debit credit rules in this course. Once again, I wanted to show the calculations even though I did that strikeout font thing so I could show you that we don't actually do that in the accounts. And in my accounting lab, they don't leave you that many lines, so don't try to do that or it'll mark you wrong. Let's look at the accounts receivable account for a good example. In the accounts receivable account, we had one debit of $5,000 and one credit of $2,000. We would just then put in the balance as $3,000, but on the debit side. And as you can see, I've done the rest of them already. Notice for our normal balances, all 4 of our assets up here on the top row are all assets. They have debit balances, better have debit balances, or we know we've done something wrong. Whereas accounts payable is our liability, so it has a credit balance, which is its proper normal balance. Owner's capital has a credit balance, the proper normal balance for an equity account, whereas the withdrawals account has a proper normal balance of a debit because it's a contra equity account. Service revenue, obviously a revenue account, its normal balance is on the credit side. And then all of our expenses have proper normal balances as debits. And that was an example of how to post from your general journal entries to your T accounts in the general ledger and to get balances in your T accounts.